Hey everyone, Coach Investor back to another earnings video for today. So let's discuss Teladoc. The company actually reported another great quarter, but guess what? The stock is down. At the time of making this video, the stock is actually down 5%. What did you think that Teladoc reporting great numbers will result in the stock being up? Clearly, you're new here, but jokes aside, the company is doing actually very well. In this video, we're going to go over the earnings report, just like we've done with AMD. If you've missed that, top right corner. And I'm going to touch on some key points that they mentioned during the earnings call. Also, very important to note that in 3 weeks' time, there is an investors day where they will answer more questions with regards to the products that they're offering and maybe some products that they will offer in the future as well. Now, before I jump into this earnings report, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so third quarter revenue grew 81% year over year to $522 million. They were guiding between 510 and 520, so they beat on that. They also updated their full year revenue to $2.015 to $2.025 billion. Originally that was 2 and 2.025, so now the midpoint is just a bit higher. As for the total third quarter visits, they came in at 3.9 million. That's up 37% year over year, and that also topped their own guidance of a midpoint of 3.5 million. And as discussed in my last video, they made significant new agreements with CVS Health and Centene to provide Teladoc Health's primary 360 to deliver greater care access and health engagement. And I also missed something in the last video, and that's touching on the partnership that they made with Microsoft Teams more specifically, to create a unified practice experience for clinicians. Now, they also reported that the percentage of chronic care members enrolled in more than one program has grown 3x year over year to 24%. All right, now let's go into the good stuff. So the revenue is broken here into 3 segments: access fee, visit fee, and then others. You will also see that the US market is still very big compared to the international one, but maybe that will present a huge opportunity in the future. But right now they will focus much more on the US than internationally. So access fee revenue grew 99% year over year, with the US growing 113% and internationally just 19%. As for the visit fee one, 18% year over year growth for US, 22% growth for internationally, with an overall growth of 18%. And as for the other segment, there's actually a decrease of 9%. As for the US paid membership, that grew 2% to 52.5 million. And the US visit fee only access grew 8% to 23.6. Now, as for visits, which is a very important segment for the whole business, so the US visits grew 40%, international visits grew 19%, which brought the total visits to a growth of 37% year over year. Overall, the total visits and the sessions provided and enabled grew 27% to 4.8 million. And if you're listening to this and not watching and you don't know what platform-enabled sessions are, so those are basically a unique instance in which our licensed software platform has facilitated a virtual voice or video encounter between a care provider and a client's patients, or between care providers. We believe platform-enabled sessions are an indicator of the value our clients derive from the platform they license from us in order to facilitate virtual care. So overall, I really can't see anything bad from those numbers, especially not something that might justify a 5% drop after hours. Again, during the day, the stock might be up, but as of now, it's down 5%. Now let's have a look at the guidance. So for Q4, they expect total revenue to be between 536 and 546 million. Adjusted EBITDA to be between 69 and $74 million. Net loss per share to be between negative 73 cents and negative 53 cents. As for the total US paid membership, they expect it to be in the range of 52.5 million and 53.5 million members, and visit fee only access to be available to approximately 23 million to 24 million individuals, and also expect the total visits to grow quarter over quarter to 3.9 and 4.1 million. And as for the full year, as we said at the start of this video, total revenue will be a bit higher at the midpoint. Basically, everything else here is a bit higher than what they guided in the previous quarter. I will pull up the picture so you can see the difference. Besides one thing, and that's the adjusted EBITDA, that's a bit lower. That will be between $260 million and $265 million, instead of a high point of $275 million. So looking at those numbers, I really can't see anything negative. Even guidance is better than expected, at least better than what I expected. And it's great to see that they even updated those numbers on a positive side besides that adjusted EBITDA. But overall, it's a pretty positive print. Now, during the earnings call, they did mention a couple of things that I want to mention right now. So they did say that 70% of bookings were multi-product sales. Last year, that was 50%. So great to see a growth in that as well. Now, with regards to competition, some analysts asked them that, or with regards to United Health as well. Now, they did say that United Health is great. They also have a great relationship with them, but United Health's plan, the virtual plans, is not available nationally. I believe Teladoc is available nationally. It's one of the few that actually has a virtual health plan that is available nationally. At least that's their main goal. They also said that as more plans emerge, they see opportunity in those instead of difficulties. So to me, it's pretty clear. Management knows exactly what they are planning with the company. The vision is very clear. I said it before, I think 2022 is really when you're going to see Teladoc grow even more. Right now, we're still having those negative effects of that Livongo merger. By negative, I mean on the balance sheet, not negative as products or those two companies merging together. So overall, this is another great quarter by Teladoc. The long-term thesis is still there. Nothing is broken. Like I said, a broken stock does not mean a broken company. That's exactly what you can apply here with Teladoc. As you know, I own Teladoc indirectly through Arc Genomics, but I would like to know what you Teladoc holders think of this quarter. So do let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.